Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Friday, July the 17th, the year's 2020. Let's talk trading. It's time for the weekly wrap up. And you should know that these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. And traders, when you're trading, always have your risk management in place. Never ever lose more on any one particular trade than you're willing to lose on a trade. Brain management. Don't engage of any of these. Just don't. That way you won't feel any pain. On the money management side, if you don't take profit before the market takes it back, that's on you. Don't blame the market. Okay? For the week, if you were trading a euro and you were trading a gap, the gap didn't fill. All the other pairs, the gap filled. Now, there's some people, some traders who I guess they don't really understand about the gap fill. So let me just take a couple minutes to explain. So maybe this coming Sunday/Monday, you can take advantage of it. Okay, here, last week closed at 1.26281 on the pound. But the week opened at 1.26150. So remember, 150 versus 281. That's 13 pips. So what you would do is you would trade towards last week's close. You trade away from this week's open towards last week's close. So since it gapped down, and red means it gapped down, you would want to buy and go long. Now, what you have to be careful of is the spread, and that's why I have spread on this particular chart in the dashboard, okay? Because if the spread, you see right now, normal times it's about 1.2. If the spread is something crazy like 10 or 20, what I would most likely do if I wanted to trade this gap trade, I would wait for the spread to calm down and get back within reason. Sometimes that could take 1, 2, 3 hours on a Sunday/Monday for it to do that. So, as I mentioned, this isn't difficult. It's just simply you're always trading away from the open toward the previous week's close, and you're contemplating that the gap will fill. So if you have any more questions, feel free to ask, but it's really something very simple. You don't need to make it complicated. Just make sure your risk management is in place. Now, this was a very interesting week here on the pound. We had the Monday put in the weekly opening range. And then on Tuesday, it went through the bottom, touched the monthly, it went through into the monthly opening range and then came right back out and back into the daily opening range. You see, we never broke it on the top side. We barely broke it here on Wednesday. We broke it on Thursday, and we broke it again today, Friday. I would say very simple horizontal line trades. Once again, take profit before the market takes it back from you. Have your risk management in place. Now, along these lines, I had a couple of traders ask about, they can't sit at the monitor all day. They have to go to work, or they have other reasons why they can't just sit there and actively trade. And I spoke about that in one of the step-by-step videos. But I was thinking about it. It's like, well, if you really want to do a no-look trade, one of the no-look trades would be that weekly open range trade here and the monthly open range trade, where you just put your orders in ahead of time. So for example here, after Monday closes, you could then put in an order to go short at the low, Monday's low, and long at Monday's high, and one of those will trigger, and then you, of course, you have your stop loss set. You could even have a take profit set, and you could do the same thing with the monthly first day. You could also do the exact same thing on the weekly. You could have you put a trigger in, you go long here and short here, and you see some weeks it happens, and then some weeks like this week you wouldn't have triggered. So that is also something you can do. You put a no-look trade on, is what I would call it, where once you put the trade on, you set your stop loss, you set your TP, and then you don't have to look at it. You don't have to trade tick by tick. You can walk away. And I think that's what you're looking for. So daily highs and lows each day of the week, you could do the same thing. So for example, if you had done that today, you would have had a long at this level, a short at this level, and it did break out. So you would have been, let's see, you would have went short at the low 195, and then you would have been rewarded low, see, 195, 111. That's about what, 8 pips. So maybe if you put on a modest 5 pip take profit, you would have won. If you would have said, no, I want 10 pips, you would have lost. So what you can do is you can run the frequency distributions of high minus previous high and previous low minus low, and see what the quote-unquote sweet spot is to set your stop loss and your take profit. And basically, I would call those one-to-one trades. You know, you risk 5 pips to make 5 pips, something very conservative like that. Because once again, since you're not monitoring, you have no idea how many pips you may or may not be leaving on the table. I mean, you know, on a day like this day, where you would have only taken 5 pips and left a ton on the table, you might be tempted to change that. But this, you only get these is when you're watching the trade, unless you just wanted to leave the trade on. Inside bar, you can see here, nothing happened. Today, we only have 3 pairs over 100 in range. I guess the market's kind of worn out. Our traders are worn out. They want to get to their Friday business. Go have fun on the weekends, I would assume. Okay, we took out the pivot. And once again, another no-look trade would be the pivot trade. You can put your pending order in at a certain time of day. So you know after the day triggers. And if you use my indicator, you would know you can actually calculate what I call the future pivot point ahead of time. Just take today's open plus today's close plus today's, you take today's high plus the low plus the close divided by 3, and that will give you the future pivot point, because the pivot point is yesterday's high plus low plus close. So, and usually you'll be within a pip or two, so you just target that trade. I guess if you had a sophisticated EA, it would calculate it for you, and every day you say, okay, starting at such and such a time, fade the pivot, which is, once again, you're trading away from the open towards the pivot. So if the pivot's above the open, you go long. If the pivot's below the open, you go short. Not difficult. So that would be another no-look trade. And of course, you want to run the statistics to see which pairs close the gap. And then you might also want to say, hey, unless it's 10 pips away from the open, I don't want to trade it. These are things that you have to decide as a trader. Okay, we had a 59 pip range here. So we had some green rats have been chewing on the cheese here, getting their bellies filled. So there was a nice trade there. And I guess some of the people people new to the channel, welcome. A lot of you liked Rat Zone. You heard about it over on the tradingnut.com. That's what led you here. And a lot of you have told me how you can't believe how simple this is, because it's just horizontal lines. You don't have to do a lot of squigglies, and it just makes sense. And somebody even said I was pretty funny, but I guess my jokes are only funny because they're true. And so right here, you see here you had a red candle followed by a green candle. You take the high, you go trigger high there. That's a green reversal. And in this case, you had a red candle, a green candle. But you see here that green candle already covered the red candle. So you might have triggered here. Last chance to get in it was at 31. But you see we're at 60. So you'd be 29 pips to the good already. And rat trades pretty much happen every day, so long as the range is big enough. Once again, showing the pivot, we took it out, and here we have a monthly pivot, got hit again a couple of days ago, 3 days ago. Missed pivots on the week, you can see not too many missed. We only won this year, 0 for last year, but it might take you a couple of weeks or a month or so to make up those missed pivots. On the daily, we took out this one. We took out this one yesterday. We took out this one there. So we've got a missed pivot up here and a missed pivot down here. You can see almost 200 pips away here, a little over 200 pips away there. Wick zone, in and out, in and out, in and out. Price doesn't like staying in the wick zone. So that's another, you could almost do this as a no-look trade, but I think you might want to be careful with it. And one of the things is you can filter. You basically would look to do a continuation trade. So let me move down a chart or two here. Okay, continuation trade is what happens after a turn trade. You've got a bull candle followed by a bear candle. So this is a turn. This is a turn right here. So once price turns, now you look for the continuation. So you would take the short here. You wouldn't be looking long, you'd only be looking short. And so like in this case right here, you have a turn trade, a bear candle followed by a bull. So when price opened, you'd only be looking long, but you never got your trigger. And so here you have another turn trade. You had a bull followed by a bear, so you took the trigger, but there wasn't much to take. And that's what happens with trading. We can't predict the future. So I hope that gives you, traders who want to have no-look trades, hope that gives you some ideas on what to do. We did the wick zone. Once again, just showing here breakouts of the previous hourly candles high, profitable trades, simple trades. And I've already gone over this one. And once again, simple, long at the line. If it's green, short if it's red, paying off once again. So fellow traders, that wraps up the week. Hope you had a profitable week. Have a safe weekend. And remember, it's not what you trade, it's how you trade it. So when you come back next week, Make sure you drain the banks. TheRumpledOne signing out.